Morning, everyone. I hope you guys are doing amazing. It's a brand new week, brand new opportunities. The market is looking over the world. Other than that, I hope you guys had an amazing weekend. The guys with family, the guys that are celebrating. I'd like to welcome you back to this brand new week. In the meantime, I would like to always remind you that everything over there is not financial advice, and please do your due diligence before you take any trading opportunities in regards to the market. In the meantime, as we give a few players a few seconds, about a minute or two to join in. If you haven't created your FXPesa account today, you can always create one with the link in the description. And just to remind you, we do have the ongoing Caribou bonus where you get 100% bonus of your first deposit. So make sure you take advantage of that and don't let the opportunity pass you by. On the other hand, we do have a special webinar that happens on a monthly basis, and this month's edition will be going down tomorrow, 8 p.m. on Zoom. We shall be having all the education team from FXPesa, myself, Rufus, and Robert from Kenya, and our previous Maximilian, all the way from Tanzania. Now, you do not want to miss it out. Tell a friend, and make sure you all join in. And a lot of things will be shared, like market analysis. So you can just use the link in the description as well. You'll find the monthly market webinar, and we're focusing on mastering daily market setups. That means we're talking all about directional bias, weekly opportunities, and how best you can capitalize on the market's opportunities given to you on a daily basis. So other than that, I believe we have Phenomenal Power joined in. I hope you have also shared the link to your groups, to your peers as well, and so that you can see what the markets has to offer us in this new. So as usual, we tend to start from our forex calendar, try and see what events during the day may cause some kind of volatility. As retail traders, we know that one of the biggest challenges we tend to face is very, very volatile market conditions. And we always tend to be able to single out what news events during the day are most likely going to cause this kind of volatility that is very, very unhealthy for us as retail traders. So this is my economic calendar down on my platform or your equity platform. It's the same exact platform. Equity for Uganda and Tanzania, then FXPesa, of course, for Kenya. So this is what it looks like. And today is Monday, and as you can see, I have a series of events coming up. Right now, we have high impact news coming at 11:15, and this is the RBA governor. Abdullah has a speech that will affect the Australian dollar. Later on, did we have any other major news events through today? Yeah, so you see, we have a couple of speeches of impact news, medium impact, non-defense capital goods. Let's see, do we have high impact news events this side? No, we pretty much don't have any other high impact news coming in through the day. We just have that speech coming in from Bullock that's going to affect, of course, the Australian dollar. On the other hand, okay, let's see. On the other hand, what else can you expect? You can look at some market news and see if there's any macros that are looking to push the market in a particular direction. So, of course, you access all of this in your analysis section. When you log into your account, your FXPesa account, you're able to get this on this analysis section over here. You come down to market news, market calendar. There's even a research terminal that you can actually be able to take advantage of to do your research or to see what's moving the market. In case you're not very conversant with listening to like Bloomberg and analyzing what those guys on Bloomberg are talking about, then you can always shift to the equity FXPesa analysis terminal. So here, what do we have? We have German's IFO business climate index expected to rise slightly. Risk assets rally, anticipated US-China agreement. I believe this is going to be the major news event we would like to look at going into the first few days of this week. So you can just have a brief insight on this. As we all know, the US-China agreement has always been in balance ever since Trump began his whole tariff situation, though they did have a truce for 3 months and it's coming to an end. And Trump did give China only until 1st November for them to come up with a sensible deal for him. They were supposed to meet with Xi Jinping, but then most likely maybe a postponement. But let's just have a look at what this is giving us. This came in about a minute ago, so it's a live update. Global risk assets have shown strong demand following encouraging reports about a potential agreement between US and China over trade issues. The upcoming meeting between President Trump and President Xi Jinping is expected to yield positive outcomes regarding tariffs and trade concessions. Then a possible reserve rate cut of 25 basis points would further support a favorable market tone. Meanwhile, the People's Bank of China decision to fix USD CNY lower indicates an intention to boost domestic demand. Okay, so I think the main take from this, from a retail perspective, is going to be the fact on this first paragraph, where global risk assets have shown strong demand. So usually, one thing important to understand is what are these global risk assets. It now is no longer gold; it's now the currency pairs that are going to likely be affected by what? By this currency, by this trade deal in simple terms. That's when they speak of global risk assets. Usually, the investors, when they are risk on, they're looking to invest more into currency bonds or into particular currency. This is what the investors are looking out for when they are risk on. Then when they are risk off, they're looking into safe havens like gold. So during the times of tensions, they are running to gold to protect themselves as a safe haven asset. That's when they are risk off. And when the trade tariff is now looking like US and China may come to an agreement, they can now go back to a risk on. That means they will stop going into gold as a safe haven. Then they'll go more into a risk on assets like currency. That's the US dollar, it could be the euro, it could be the Australian dollar itself. Because a lot of these economies do their business through China all the way to the US. That's why it becomes very, very important for them as well. So you can see there are major pairs we want to watch out for from the macro side. The Euro USD, the odd USD, the USD JPY, the JP USD, and of course the US 500. And why this is very particular is because, of course, the Euro, a lot of European countries do business through China. Australia, being a continent that's very isolated as well, does a lot of business through China to the US. So that's very, very important. Then, of course, the Japanese yen, being one of the world's biggest tech nations in the world, they also do a lot of business through China to the US. And, of course, the Great Britain as well. So these are some of the major currencies where investors will look to invest. That means their currency pairs will definitely be affected by that. So this is just something you want to look at. Then, of course, US 500. We're talking about America's 500 biggest companies, right? And many of these companies are getting raw materials from China. Some are taking raw materials to China, getting back finished products. So all of these become risk-on assets for investors in case the US and China come to a good trade negotiation. They speak something about the Federal Reserve. We know that 29th of this month, in 2 days, Jerome Powell will come and give us his rate decision. So right now, 25 basis points is more than inevitable after we saw the CPI come out lower. That basically just put more pressure on the Federal Reserve to push for lower rates to try and stimulate economic growth. So that's something that's more likely to happen as well. So another thing is that, of course, when they dotted 5 basis points, investors will tend to kind of invest in gold, but through one of their policies known as forward guidance, the Fed has done a very good job of boosting the investors to reinvest in the dollar rather than going into a risk of assets like gold. So as much as we tend to see a push up in gold, we may also tend to still see the DXY gain a bit even after 25 basis points cut, just like we did on the last Fed meeting, which was on the 17th of September. We saw them doing a very good job with forward guidance. That's basically some of the articles you can find on our research terminal. There's a lot of them. Then we have this research terminal where you can just look at how trade ideas, what currency pairs, and what the sentiment looks like. You can always find these around. You can get some assets, looking at fixed up assets and looking for general sentiment. You can always find it there. So I'm going to move on a bit for its factory and see if we have anything that you may want to look out for. So as far as Monday is concerned, we don't really have anything apart from still the RBA governance fitting in. So here there's an update, but then I will let you find an update that may come later in the day. Okay, so I don't think we have any other major outlook I want to look at. Let's see. Gold drops amid progress in the US-China trade deal, as I just explained. Coming towards a trade deal means investors can move out of gold, safe haven, and go into riskier assets like the euro, the dollar, the Japanese yen, the British pound. Then we have something to do with oil here. We are seeing oil hedging towards 55, I think last week, but one even going into last week, but then it hit a recovery in between, coming back towards the $60 mark per barrel, right? So West Texas Industries crude oil futures rose to 61.6 per barrel on Monday, hovering at its highest level in over 2 weeks, as signs of a possible trade deal between the US and China lifted the energy demand outlook. So our US Treasury Secretary Scott Bessent said on Sunday that he reached a substantial framework with Chinese Vice Prime Li Feng, which will be discussed when their respective leaders meet later this week. The talks covered a wide range of issues, including export controls, tariff suspension, related tariffs, and agricultural trade, and then additional support, right? Oil prices came from ongoing concerns over Russian supply. Last week, the US imposed new sanctions targeting Rosneft and Lukoil, which together account for about half of Russia's daily oil production, funding the Kremlin budget. So, of course, we all know that after Trump mixing up, speaking about his frustration with the failure to come to a consensus in the Russia-Ukraine war, he did make it clear that he's going to want to frustrate Russia by frustrating its source of income to facilitate the war, even if Putin says they can still fund the war go on. But that's one of the things that Trump is looking to. That means more sanctions on Russian oil and Russian and companies that get Russian oil to resell it as well. And basically, of course, you know that when they sanction Russian oil, that means that there will be like an oil supply deficit. All this oil is being supplied in general on a global scale, and that pushes for higher prices. On the other hand, if the US and China still come to a trade conclusion, that means there will be more demand for oil because now there will be good trade deals between the US and China. Of course, so the oil demand will generally increase, and that also means that people who have surplus right now will want to probably hike their prices in the wake of ongoing or the forecasted demand for oil, right? That's how business tends to work. So all those are tending to push oil prices a bit higher. So of course, the only way that we may want to see our oil go lower is probably if OPEC comes up and increases the number of barrels being produced per day. And at the same time, some sanctions on Russian oil are also reduced to try and create an oil supply surplus, which leads to lower prices. These are articles you can see. It's not a very eventful Monday. Probably maybe in the macro world with a Trump deal, with the Trump-China, the US-China trade deal looking positive. On the other hand, now we can go a bit into our technical side and see what best opportunities we can come up with from the technical perspective. Just share this in a bit. All right, so 75, let's start all that in the dollar index. Let's start all that in the dollar index. Okay, so this. All right, so coming into the daily time frame, as I said for quite some time, we did have this breakout to the upside in the daily price created a higher high, came lower, created a higher low, and it's now pushing to the upside. We did see this push to the downside coming in from last week on the CPI figures, and of course that didn't quite push price lower. We saw that long rejection showing us the strength on the buying potential on the dollar. So the dollar is of course going to continue gaining a bit going into this week, probably until we see what Paul will have to say after doing a possible rate cut. That's more likely to happen. So coming on to a 4-hour time frame, you can still see that a lower time frame trend is pretty bullish. It's still very bullish, as you can see this. We have this trend line being respected beautifully over here. Right now, the one obstacle we can look at that may cause us some kind of a pushback to the downside slightly would be this zone. We have this zone over here. So I just like to refine it down to be this area here. It's not 4-hour time frame. So this is definitely the high once the price break above to continue all the way to the upside, or to bring DXY comfortably back to the 99 levels as well. This is a dollar index. So what we would see is right now price, because of rejection, there was a bit of this consolidation before the CPI news came out. We saw that price has just simply come back into that bit of price action over here. It's kind of like a consolidation. You can see price has just come back into that bit of range that it had formed. So what possibly happened is that you're still looking for a breakout, variable to the upside, before we look for a big move on the DXY. So it's looking for something probably like this. Then we can see this either continue all the way to the upside and take out those highs, preferably. And of course, this would be the sentiment generally, in case after Jerome Powell gives a rate decision, he goes ahead to how would I call it, to convince the investors to continue investing in the dollar index itself, as they're doing so far. So it's something you want to see out on the dollar index. Price is back into this, meaning there's a lot of still buying momentum. You haven't yet got into an exhaustion, so you can still anticipate for price to go away to the upside through that. In terms of bearish opportunities, in case worst case scenario, probably let's say Trump does something funny in between the day. You know, he has a tendency of doing such things. This was a weak down, but price did still reject this demand level here. I would still look for selling opportunities in case price happens to break below this level there, which is still most very unlikely to happen right now. Maybe probably after, in case after Powell does a rate cut and fails to do a good job at forward guidance, then you can probably see the dollar index take that kind of direction to the downside. But for now, the sentiment of the dollar index is still pretty bullish, though we are currently in between our consolidation right over there. So now we can move on to a bit here USD and see what the euro is looking like. We all know that a bullish DXY basically means we are leaning a bit more bearish when it comes to pairs like Euro USD. So as you can see that the Euro USD for quite some time has also been on that recover, that push to the downside. Let's have it from here. So you can see that within this price level, the euro has also been leaning lower as the DXY was gaining some bit of strength, right? So you can see that price give us a break to the downside, forming a lower low. We had retracement all the way into the supply level. All the way into the supply zone here. And of course, price was able to respect it and then came back down to the downside. But on this obstacle here, there was a demand that price had formed within that area there. And if you watch carefully, that demand try to push back price to the upside. This demand level over here as I try to push price back up to the upside. Someone just get rid of that, so can now lean lower into the lower time frames, try and see exactly what's happening. The ultimate goal would be to see the euro, go all the way and break below these levels here, or start pushing lower for most of this week in regards to what the DXY is looking like. So when I go to lower time frames, as you can see, we saw that Euro USD did give us this push up all the way into a 4-hour supply level over here. That currently is looking to kind of respect, though it will have to break below this demand level here to actually go all the way to the downside. So what I would want to look at in this perspective would be something like this. Would have that, and I think I would have a cleaner trend line if I do it from this point here and put it all the way to this supply level here. I think that makes more sense. So what I would want to see is probably price break below these levels here. Of course, the possibility of having a retracement slightly to the upside, but the variable thing would be to see price come and break below this area here. Then I can look for selling opportunities because basically the DXY looks bullish, which means that the Euro USD would be something we'd want to watch out for to go to the downside. In regards to this supply level, I feel like it's already been exhausted because the price pretty much looks like it has exhausted. Okay, not pretty much up to 50%, but about 50% of it. You see that 50% level. Price has clearly at the 50% level, which means it's no longer a very high probability area. You can refine it to that. Worst case scenario. So worst case scenario is price can still push back up because we have this extreme supply zone. We do have this extreme supply zone here that price could still look to come and use because this one has been partially mitigated. So if price comes back into the zone here and doesn't quite get enough liquidity, then you can push the up one, push the one above before it directly and starts going lower or edging lower. So this is something we want to look out for in regards to the Euro USD. Trying to align it with our opposite dollar index that we looked at a bit earlier on. From this, we can now come into a bit of GBP USD. And move into GBP USD. The GBP USD is that although it has been pushing to the downside, the price did come and give us this push to the upside here, breaking a bit of this trend line and giving us this kind of correction move, going lower. But as you know that the dollar itself has been on a recovery, which means when it's getting stronger, I would expect this pair to start leaning towards a bearish momentum or towards bearish moves. So let's try to factor that in and so we can come up with some new analysis on GBP USD and see if it does align with what we are seeing on the related pairs. That's the DXY and the Euro USD. So on this side, you can see as well as a daily time frame, it was doing a very good job of going to the downside as well, as you can see. Could be a kind of trend line. Then the most recent price action that occurred, we have it zoomed in. We did see price post forming lower lows, lower highs. We have a lower low, a lower high, lower low, lower high, lower low, and possible lower high, right? So here price broke structure giving us a lower low, came back into this area giving us a lower high. So the ultimate target here would have been to see the GBP USD. Some famously call it a cable. If you feel like you want to call it cable as well. Sorry. Feel like you want to call it cable as well. So this is the area we'll be targeting for price to come and take out as well. So right now it's within a demand level. And if it's going to hold it, you want to look for bearish, for low time confirmations. But I highly doubt that because the DXY is looking a bit pretty positive. We still do have this zone fully unmitigated when it comes to GBP USD. Where it has a whole demand level and order block that hasn't been tapped into, which means it's still a potential buying area. So I'd anticipate some kind of buying reaction when price gets into this. Why I would want to do that is because I'm seeing that this demand level meets all the criteria and even extra criteria. For example, it's fully engulfed. It has this imbalance in between. It also has a breakout to the upside, only to a breakout structure, not one, not two, but a few multiple breakouts of highs. And when price does this, we can now see the correction move to the downside, the correction move to the downside. So usually what happens, in case prices to go lower than this, it will just tend to spike all the way to this level and close below it. And that hasn't happened yet. So in case you're looking for bearish opportunities within this, you don't focus more on price breaking below this area, giving you that nice retest, and then pushing to the downside. Remember, we said this is a generally bullish area that meets all the criteria. That means you can have some lower time frame bulls within that zone there. So if I'm to refine this as well, we can have it all the way here. We can have it all the way there. That means price can as well come into this area here and then give us some bullish confirmations and give us some bit of bullish structure on lower time frames before it generally either goes to the downside, or in case it breaks these high levels. Yeah, why I would like this high to be my ultimate level breaking out is because of the structure. It forms some kind of head and shoulder pattern around here, right? So unless price breaks above this level here, it's going to look for some bit of longs for quite a bit of time. That's when I'll look for a bit of them. But for now, I'll focus more on this area, giving some reaction buys. This being at that minute time frame, the pips may be relatively good enough. So yeah, you can always do that as well, or have that perspective in regards to our GDP, USD, or cable, known as. I think that's as far as the dollar pairs are concerned. So we can lean a bit away from dollar-related pairs. I think I'd prefer to look at gold if we move to other currency pairs. Now this is our chart on the daily time frame. As you can see, price can go to bearish momentum. As you might have seen in our title, or in today's market snapshot heading, at gold did start with a bearish momentum. It's pretty much, but then when you look at the structure carefully, of course, generally you can just see the trend has been bullish quite some time. It still is. And then when you look at this previous bearish move, it's trying to a bit come back all the way into this zone here, or this demand zone. So the first time we had it come into it and then reject it, which means this area had a bit of bullish liquidity. It had a bit of bullish liquidity, and then it failed to continue to the upside to fill up the imbalance get formed. So what's happening is the price is looking to push lower. So the first thing I want to do is to first see price mitigate up 50% of my zone. So here I realized it didn't. So I'm going to just refine this to below this week where 50% was, slightly below this week. And then it's going to be the area of interest I have to look for bullish confirmations in case price comes to them. But then, of course, I can use lower time frames. With lower time frames, I can refine these zones, the areas of interest, and also come up with areas where I want to set my criterias in case price happens to go to the upside. So look at this, we had a very strong rejection area here. So price came, retested it the first time, retested it the second time, third time, and now it's still pushing lower. So the ultimate goal here would be this area to push price all the way to this demand. And then after that demand level, we push back to our zone here. Put that resistance on there. So the idea would be something like this. This area of interest. You want to be able to take the best of confirmations entirely. You want to take the best of confirmations entirely as well. So once I break above this resistance zone, will definitely mean you're focusing more on looking for those bullish moves to come and fill in this imbalance when it comes to gold, right? Filling this imbalance, it's still pretty bullish. Unless we get more positivity coming in from the US-China deal, then we can look at investors basically doing withdrawals from gold or profit taking, example, call it exhaustion as well. So that's something you want to look out for when it comes to gold. Let's look a bit at silver. So silver as well has pretty much been on a bullish move for quite a while as well. It's not a safe haven, but it can act like one because it's a commodity pair. The commodity pair means you built in other industries, particularly the steel and tube industry. They use silver a lot to fix like in the US because of the high demand for silver. One of the things investors will do is that they cannot go to risk on assets like the dollar bonds, the euro currency. They will look for some of these commodity pairs like silver because they know that demand for silver is always going to be there. Given the fact that some of the big trade deals Trump has signed are majorly in manufacturing, where silver is a very important component. So that means to also keep increasing in value as well, because investors will just invest into it as a commodity because of its demand and because other risk-on assets are unavailable during some of this period of time based on the market conditions or the level of protection happens in these nations. So that's the relevance of silver, but it's not a safe haven currency. Though it can be used alone, but it's not a safe haven currency. So as an interest in a daily time frame, you can take it as a daily area of interest, just like gold had. And of course, we had this push down, very aggressive push down, and of course, to fail to pick up liquidity. Now, when you look at this demand level and silver, I realize it has been consumed by 50%. So I'll tend to go to the one right below it, and this will be my general area of interest. So now, of course, by now, you look at the structure of gold, you know that even silver on a long time frame has some sort of resistance happening around here. So now here is that price in a range, and within this area, trying to price can push all the way to this demand level, or it can give us some conditions to push and target that resistance level. So you can set on lower time frames. So you're at this resistance level here, as you can see. Then of course there's a support right below it, but of course when price breaks this support, you want to focus on price going into this demand level here. We can go to define this demand as well, all the way to that zone, right over there. So that becomes the area of interest on our one edge, and then this becomes your resistance. So the resistance I prefer, price comes and breaks above it, gives us a nice retest, then comes to try and fill up this imbalances that happened from the upside as price was coming down. So that's as far as silver is concerned. And it's like in the meantime, I would like to remind you guys that tomorrow we do have a special webinar that will be taking place. It will be an online webinar that will be combining the whole FXPesa education team from Rufus to Robert to Prudence to myself. And you don't want to miss it out. If you have people you're trading with, you have people you know who want to get to trading, you have someone you know out there who would like to get this webinar, kindly check the link in the description. You can sign them up, you can send them the link, they can sign up. And of course, you can as well sign up for all our classes that happen through the week. We have online classes at 8 p.m. and then 11 a.m. That's 11 a.m. is advanced, then 8 p.m. is beginner. We also do have physical classes in Uganda and Tanzania. That's really building Lumumba Avenue for Uganda, 7th floor, and then FNB House, Dar es Salaam, for my friends down in Tanzania. So this is what silver looks like in this case scenario. Let's look a bit at JPY, USD JPY. So USD JPY, this analysis from last week, and this pretty much how it played out. So we did see price give us this push back into that area to retest, then push lower. And I remember mentioning the JPY is generally leaning a bit weak because of the prime minister was pretty much dovish. And of course, you can see USD JPY is pushing to the upside after this retracement. Remember, JPY did gain a bit on Friday last week when the CPI report came out, which affected the dollar for a short while, and that also gave the USD JPY some bit of momentum. The Japanese yen just started to gain some strength, of course, over the dollar. So going into today's price action. Going into today's price action, you can set the time frame high, low, higher, low. And right now, I'm also looking to see if price is able to take out these highs over here and then it close above them. So you can see I just retested these levels today, and it's kind of looks like it wants to give us that rejection to the downside to try and give us some kind of retracement because we have another small breakout right in between this. We have that small breakout, so price can retrace into this zone, try and continue to the upside. So that's going to be generally my area of interest I'm only watching out for as far as USD JPY is concerned. So that's the zone. In case price breaks above and closes above this high, will still be the zone responsible for the breakout. In case price does that the way it is and continues moving to the upside, then definitely breaks out on that left hand side high. Now here we can have USD card. You can see that the Canadian dollar is trying to gain a bit of strength, starting in from last week. It gave us that bearish candle. As I was saying, the Canadian dollar trying to pick up a bit of strength. It gave us this push from last week. The downside giving us a bearish candle, and that's this week of the candlestick for today has begun a lot of bearish momentum. So you can go down to the daily time frame. Then you can look at the lower time frame structures from here. As participating higher highs, higher lows, higher lows, higher high. Then in this case scenario, our price giving us that some kind of deep retracement at which can get back to its demand as so its demand zone will be our area of interest where you want to look out some buying opportunities when price gets to it. That means you need to have your confirmation tools ready when price happens to get into that zone, or that one hour USD card zone. So we can do what we refine this. So upon refinement, I've come up with this nice demand level order block. So this will be the place that I would like to take my possible buying opportunities as far as USD card is concerned. So of course, I break below that level there, I'll probably be waiting for confirmations or looking for some kind of bearish signals that price is going lower. That comes from just getting pure price action or even looking at some structure changes as price approaches towards these areas of interest. So that's USD card. So you can drop your comments in us. You can drop your comments in the comment section, and I'll look at them when you're coming towards the end of the session later on. So moving on, I want to look at Bitcoin. Oh, it's already on the chart, right? So Bitcoin, we did see a crash happening about a few weeks ago. There was a crash on the daily. Price tried to come and do our flow over here, but it failed. Trying to give us this correction or move to the upside and definitely targeting, take out the previous highs over there. They have been swept from the daily time frame. So going lower into small time frames, you can start with a 4-hour time frame. Bitcoin did offer a very nice entry from here, very nice pattern, nice retracements, and then this correction moved to the upside. And it's currently at these previous highs, and then it's rejecting this supply zone in between here. So ultimately, the goal would be to see this pair retrace a little bit. So once this pair retrace a little bit, probably to this demand levels to pick up some bit of more momentum. Consider that demand level over there, and hopefully if this closes bearish, can push price into this level. Before price goes to the upside, we do have quite a very big range of imbalance there. That once the price come back and probably tend to balance in or to rebalance before it takes the next decision to go to the upside. That means if this price happens over its confirmations for buys, the definite target would be this supply zone. That would be a possible target in case price retraces there, and these are the confirmation there as well. What else could happen is price would just take out these highs. If I take out within a candlestick closure, not a straight, price could take out those highs, give us a slight retracement, and then continue towards that BTC USD supply and level to the upside, acting as our target in this regard. So that's Bitcoin. In the meantime, I think I'm going to be taking your questions, and I'll take the next 15 to 20 minutes looking at the analysis you guys would like us to look at or you'd like me to look at, and try to break down some of them. So you can even ask any questions that are trading related as well. You can look at this is Australian dollar and the US dollar. That we did have some bit of chaos happening in between here. Like maybe a few minutes, for like 30 minutes almost. We did have the RBA governor come and give a speech against the Australian dollar. I did gain a bit of strength on that. So I'll fuck with this. I'll lead them on to the upside. So looking at USD. So now in the time frame, you can see it's very bullish. Look at our cut up to the upside in the bullish time frame. Then going on to the 1 hour time frame, the daily time frame. You can see price did come and offer as a shift pattern around here. Then Jared came back to give us a retracement, and now it is pushing higher after breaking out of this consolidation right over here. And here we're only looking for breakouts. The ultimate goal of this would be our price comes and this series comes off this area, breaks above as it has done, closes above this trend line, later retraces back to a demand level here, and continues pushing to the upside. I believe right now the Australian dollar will be looking very strong for many reasons. I haven't pretty much seen, it's coming out of the coming out of the RBA meetings from their governor, but at least we do know that Trump did come to a conclusion on his trade deal with Australia that gave them some bit of push. But here with the US consolidation happening, then now a breakout to the upside of the card. Really, the trade deal has been so well. So it's been backed by the trade deal between the US and China that occurred a couple of days back. Until now, we now have an RBA meeting that pretty much looks to have been very positive in this regard. So we can look for some bit of strength. Why it can become tricky and why we have this consolidation is because we had the Australian dollar looking good because of the trade deal with Trump. At the same time, we still had the US dollar being positive, so two positive currency pairs. So I think let's take a snapshot. I expect from looking at this pair like that. And I put up here to show you guys what happened within this consolidation, right? There are two strong currencies and they failed to get a consensus. Basically because they were being given strength by pretty much the same deal, right? Because the Australian US trade deal that benefits both the nations. And the why price has been able to break out of it is definitely because it's entirely just the Bank of Australia giving its minutes or giving its decision that only affects them, making them relatively stronger in today's price action. So going to lower time frames, if this was to hold price to continue higher, what areas we want to look at? You can see there are two supply zones to the upside. This first one, I don't believe it's going to hold price because you can see momentum leading into it, unless otherwise. But the ultimate target we want to be in between this extreme supply zone. Now I'll take the target because based on the strength the dollar keeps getting, this can turn bearish any single time. So we can always refine this to that area there. You can always refine this all the way there. So let's look at this. Now it's a 30-minute time frame. So we have already had an impulsive break to the upside. What we'd love to see is a candlestick closure above this high. Let's get rid of this. We'd love to see this candlestick closure above this high, then a nice retracement back into these zones, and then probably push to the upside. That would be a very nice trade to move into a New York session and have that opening momentum, open New York, give some kind of pushback, and then later on continue to the upside. Why it will be very good to what? To continue pushing to the upside. This momentum looks so good, but I don't think price will probably feel this one imbalance. It may come around the breakout areas and continue to the upside. All right, so this is something I want to really watch out for. So I think also look at NASDAQ. or US 100. So of course on our platform you can have it as VT 100. We did talk about it creating new all-time highs, and as you can see, there we go. And trust me, as we lean towards the trade rate decision, we're definitely going to see more highs than this, right? So this is not 100. Travis, okay. Travis is asking for this as well. So I'm pretty much going to look for more of this push to the upside. We did see that daily time frame break of structure to the upside. Very nice price action coming in there. Friday closed bullish, then open bullish. So going into the NYSE or the New York Stock Exchange are open. That will be at about 430. We are leaving our total balances behind. That usually price can tend to want to rebalance occasionally, especially if you're not getting enough momentum to continue enough liquidity at the upside. But in the meantime, what am I going to pay attention to are going to be these areas here. It's going to be these zones in between here, right? So I'd really love price to come and just rebalance this whole area here, then give me this demand level here. But as you can see, it's creating new demand levels. So whenever the market creates new demand levels, we tend to want to focus on the most recent demand level form, provided it's a fresh demand level. So we're pretty bullish on this. And on the 4-hour, I don't have a bit of price action coming in there. So you can now try to go to 30 minutes and see if there's some more price action. Or you can come up with some nice ideas. As you can see right now, price continuing to the upside, having tested this demand level, both demand zone here, and post left one behind. Just in case it doesn't pick up enough liquidity, we tend to come back to this last one, for the last result, to give you that push to the upside. So right now, what we really see is a break above the structure, and a candlestick closure. Then, of course, you can anticipate that retracement back into the zone that would have been formed. Of course, the price is above that, it will have formed a zone of this nature here. So once that push up, then I retracement back into the zone, then we can definitely see how far NASDAQ can go. So I would anticipate it's going to go over, continue going higher, especially with that Fed rate decision coming up in about 2 days. So that's for you, Travis, in regards to NASDAQ 100 or NASDAQ. So in FXPesa, a platform you can get as VT 100 roll. So when you started will be a UT30 roll. So JPY, okay, this JPY, and this was our analysis as well. So as you can see, JPY as well did give us a breakout to the upside. It had a very nice beautiful shift pattern. We had some bit of a bearish momentum. Okay, we had this kind of bearish momentum, price forming lower lows and lower highs, lower low, lower high, lower low, lower high, lower low. Then somewhere in between price comes and offers us a nice market structure shift. Give us now a high, higher low, higher high, higher low. And as we speak, price to create a new higher high, but there's been pretty much in a consolidation, leading to what it is, right? So because of our time, I won't want to borrow at 1 hour, 30-minute time frame, see if I have any physical structures from which I can be able to build up a trade idea. So now 1 hour, I can see price came up to demand level here. But you notice that one thing it's forming is trying to form a trend line. When the trend line there, then I would definitely want to see this trend line push above the resistance. We're currently having some kind of strong resistance, as you can see here in the market. We're having this kind of strong resistance. So the idea would be that this trend line pushes price above this trend line, above that resistance over there. So once price goes above the that resistance, you can definitely look for a retracement or a test, and then probably look for those buying conditions entirely based on confirmations. Of course, I do highly advise that. I do highly advise these confirmations within these areas, and that's why I do my research on zone. Because the zone gives you room for confirmation, room for price to even breathe, then also room for you to take a decision, and a decision like trade management, reducing your lot sizes, doing intraday analysis. So it gives me all that kind of liberty because I'm using it as a zone. That means I'll always be having a sensible stop loss risk amount as well. So we have that coming in on GBP. JPY. That's my outlook on JPY. For those of you that watch the bullish part, we do have a bullish part Telegram channel where you can be able to share setups. So when you go down to the bullish part podcast, the latest that we released last Friday, you check our Telegram link in its description. Then you can go in there and have trade discussions all through the week as well, different pairs. So Justin Jorge, that's JPY for you. So as I was telling you, you can join the Bullish Panther Telegram channel where you can share different setups, discuss different issues. There are a lot of updates. Rufus is always giving updates on macros. And I said always take advantage of that. In case you're not going to be watching Bloomberg or you're very busy to analyze the whole macro space. On the other hand, I would like to remind you guys that tomorrow, 8 p.m., we do have a special monthly webinar. It's going to be themed Mastering Daily Market Setups. So that means we are going to be talking more about how you can wake up and position yourself to look for those market opportunities. We are going to be doing live market analysis with all of us from FXPesa, from myself to Rufus, Perez will be there, and Robert as well. So if you want to sign up for it, you have to use the link in the description as well. And then we meet that day tomorrow. It'll be an amazing one. So other than that, see you guys next time. And I wish you guys an amazing and peaceful day.